with Joshua James. He's the Director of Business Development of Fidelity Digital Assets. And today we're going to talk about a little bit about the institutional adoption of digital assets and how Fidelity sees the crypto ecosystem is evolving. Uh, First of all, a little disclaimer here that we need to present. This content is intended to be educational. If you're interested in our products or about Fidelity digital assets, it is important that you perform your own due diligence and read all the legal materials from our funds to make sure that you understand the risk involved. We're not recommending any investments here. Uh, this one I'll make in Portuguese as well, because it is our duty to say that que esse material é puramente informativo, pessoal, e é muito importante que todos os interessados leiam o regulamento, façam a sua due diligence antes de fazer qualquer tipo de investimento. A gente não está fazendo nenhuma forma falando de como se investir. Tá? And Hashdex's mission is to bring crypto world closer to the traditional financial markets in a safe, regulated way. And the way we do this is through offshore investment funds. You can find our old onshore funds here in the distribution platforms. And here, what we did, we developed the Hashdex Digital Asset Index, which is an index designed to broadly track this nascent and rapidly evolved new asset class. And it is designed to serve as a trusted benchmark for digital assets investing. Assets represented in our index are subject to strict eligibility requirements to guarantee the asset's legitimacy, institutional grade custody, and meaningful market representation. You can track this performance by using the Carat HDAI, and we encourage everyone to visit our website and check out the methodology, which is publicly available. Lastly, one quick note about our funds. We offer Brazilian investments that have exposure to this index in different proportions and according to the local regulators. Hashdex is subject to CVM rules and adhering to ANBIMA, several regulation code. We also have an offshore fund for foreign investors and non-US persons, and an investment which is an investment option in other countries. Hashdex is an exempt reporting advisor under SEC rules in the US and a registered asset manager in SEMA in the Cayman Islands. And please, before I hand over to Joshua, I encourage everyone to subscribe to our channels, activating the bell here on YouTube, and also follow us on socials. And during the presentations, feel free to post any questions in the chat space on YouTube. And in the end, we will answer as many questions as we can. This presentation should take around 30 minutes, and including some times for questions. And on behalf of all here as a Hashdex, we thank you for your presence and participation. Joshua, I'll switch to your presentation, and now it's with you. Thank you for being here with us, man.
Obrigado. Thank you, Bruno. It's a pleasure to be able to speak with you and your customer base and your fans today. I want to give a brief introduction on what we're doing at Fidelity Digital Assets, and before we kind of get into some additional information about some surveys and some conversations that we've had with institutional investors and the products that we're developing for them. I think it's best if we talk a bit about our history and our journey. So in the next slide, Bruno, we actually have a timeline. And Fidelity's research in Bitcoin and blockchain innovation really goes back to 2014. I think, if I had to think of one quote that really established our interest in wanting to look into crypto, something that encompasses it well is something the venture capitalist Adam Draper said. He said, if money was being invented now, it wouldn't be designed to look like cash or credit cards. It would look like Bitcoin. And I think, from the start, we had an interest in looking at the digitization or the ability to take money or take something of monetary value and put it on the internet. It seems like, we talk about The Web 1.0 and Web 2.0 is our ability to share information broadly. And Web 3.0 is really this innovation around being able to share value, locked value to globally without the need for a middleman via the internet. And so that was really something that caught our attention early on. We actually began our initial experiments in 2015, and this is around the time when the equities markets were shifting from a T3 to a T2 settlement, so trade date plus 2 days. And someone asked a question of Fidelity's leadership team saying, what happens if we are nearing instantaneous settlement? If we move to an equities market that trades near instantaneously, we need to evolve our infrastructure in order to support that. That's not the market standard. And so that really led us to look down the line of, well, is there any asset that does settle instantaneous? Well, yes, there's Bitcoin. And so we began our initial proofs of concept and experimentation around understanding how Bitcoin is created, how Bitcoin is settled, how Bitcoin is transacted. We started mining Bitcoin in 2015. We actually, through our Fidelity Charitable, which is actually the largest charitable organization in the United States, we actually accept Bitcoin, Ethereum, and Ripple as forms of donation, and to date have taken in over $100 million US from our clients who want to take that digital asset and convert it into cash and give it to the charity of their choice. This, combined with some of the conversations we've had externally with interested clients, led to the creation of Fidelity Digital Assets, the business unit and commercial entity that we have today, which is really a result of the early experimentation. We started mining Bitcoin. We needed a place to hold it. We started accepting Bitcoin as a form of donation. We were trying to understand how the marketplace interacts, how we can liquidate and sell Bitcoin. And so it was actually through exploring some of our own internal challenges from a market infrastructure perspective that led us to create this new company. And so really the problems that we're seeking to employ, or we're seeking to solve, are the custody of digital assets, the trading of digital assets, and doing so in a way that provides a holistic platform and solution for institutions who want to get involved in this asset class. Bruno, we'll move to the next slide. So just a brief background on the company. So we formally launched Fidelity Digital Assets in October of 2018. And when we went live initially, it was as a custodian. So, one of the challenges, or one of the benefits of actually this new asset class, is you can really decide how you want to store the asset. You could do it yourself, or you could use a third party. And so we built a third party solution where we built our own infrastructure for custodying digital assets on behalf of our end clients. Our end clients look like institutions. We had, in our world, an institution is a hedge fund, a family office, kind of some of those types of clients with more discretion over how they spend how they invest their assets, all the way up to registered investment advisors, pensions, endowments, charitable organizations that are holding Bitcoin. So, institution in our world, we've built a custodial platform in order to securely store and hold their digital assets for them. We built an execution services capability on top of this. And so what we're really trying to do is ease market friction. So there's friction that exists if you look at the market infrastructure of cryptocurrency, where the exchanges require you to move the asset to be in custody on exchange before you can transact. That's a bit different. That's a bit of a paradigm shift from traditional marketplace. And so, it was our belief that we needed to connect our customers, their ability to store their assets, with also an ability to transact and buy or sell Bitcoin as they desire. And so we built a multi-venue access point for them through a dark pool, where we're connecting their custodial balance to market makers in a competitive environment where they're getting trade executions from regulated entities. And so the client doesn't actually need to move their assets off the platform. All of the trading can take place within the Fidelity environment. we're mitigating some of the credit risk that comes with, the settlement process as well, by handling the sale for the customer. So moving their Bitcoin or their cash to the counterparty, and then taking the Bitcoin or cash and settling it directly into their account. And so wrapped around all of this is Fidelity's dedicated customer service, something that we believe in as an organization. We don't just build a product. You build a product and then you build, a world-class customer service team to be able to support the product. That's part of our, one of our pillars across the organization is customer obsession. And we've built this into our crypto platform as well, where we, really spend the time to learn about our different clients. Each of our clients has extremely different needs, whether they're long Bitcoin over a long time horizon, or they see this more of, an opportunistic play for, a short period, and they're going to be trading in and out. And so we've built a team to kind of staff up and support their different trading demands as well. So Bruno, we'll continue on into some actually, kind of what's driving the interest to date. And so I wanted to talk a little bit about a survey that we recently put together. So on the next slide, I'll talk a little bit about the methodology, but the methodology and the conversations that we had that I think really give a good glimpse into what we're seeing from a demand perspective for our services. So in the next slide, Bruno, we show kind of a good landscape or snapshot of the landscape that we serve today. And so the survey that we conducted was in partnership with Greenwich Research, and we talked to nearly 800 investors in US and Europe, which are the two major geographies that we serve right now. Although, with today's news, we're clearly expanding and onboarding Hashdex in Brazil. And so, but what we really tried to do is to understand their current and future interests, as well as barriers to adoption for these types of firms, family offices, financial advisors, crypto funds, hedge funds, institutional investors. And so the survey lasted from November 2019 to early March 2020, which is actually really interesting because the survey ended. Unfortunately, the timing we couldn't have picked a more interesting time to end the survey, but it actually ended right before the coronavirus pandemic, where we've seen interest really pick up again as the narrative has shifted from a macroeconomic perspective. But even back, kind of what we're trying to do in that time period is understand, what is the material client interest around this hard money thesis, the desire to hold Bitcoin in a portfolio, and kind of really understand what that adoption cycle looks like. And so for institutions, it's really important to understand that adoption looks more like a wave. Looks more like a tide than a wave. So it looks like more of a rising tide. It's not as obvious. Assets start to trickle in, then all of a sudden you look and the tide has risen. There's institutions here. So we haven't seen this crashing wave of institutional assets flow into this space, but we have seen this rising tide in certain areas where interest is peaking. And I think, what we've done is built a lot of education and awareness and work with, our existing clients on the traditional side and also newer entrants on the crypto side around, building that education and awareness. And so a lot of the catalysts that we think, institutions need to continue to grow into the space are deepening pools of liquidity, which we're actively working, with counterparties on. Settlement custodial solutions, which are actually, core to our offering, is the ability to take Bitcoin and store it with a trusted third party. Having sound and robust trading counterparties. So working with institutions that we're familiar with on the equity side, who have gotten into the crypto space, registered broker dealers who are making markets for crypto, continuing to work with them and make their presence felt. And then also, giving way to new access vehicles. So not just folks who want to directly hold the asset, but if they want to trade an index, which is the really important work that Hashdex is doing, giving way to firms that have built up and support an index, an investable index, and have it in a way where investors can access it with a reputation and brand that they trust.
Yeah.
So on the next slide, Bruno, we talk a little bit about where we've seen current exposure and channels for exposure. So out of all the investors we surveyed, about 36% currently invest in digital assets, and 60% of that 36% actually buy digital assets directly. So we actually ran the survey the previous year in 2019, and we've seen an uptick as we sort of expected year over year from investors who have an allocation to digital assets with direct investment in digital assets. I think the one important thing to note here is, though our survey focused on institutions, it's showing the growth in institutions both in the U.S. and Europe. We definitely see demand, being driven out of Latin America in this space as well. And so, not part of our survey, but in some of the research and work that we've done, we've explored allocations and exchanges through a site called Useful Tulips. And we've seen, we're tracking growth in the interest of Bitcoin across Latin America, and you can track through sites like localbitcoins.com and other kind of more peer-to-peer style exchanges, the growth and interest and actually real demand driving across the Latin American market. So, obviously strong growth in places that have hyperinflation like Argentina, Venezuela, but also, we're seeing a strong market demand for trading in places like Brazil, Mexico, Colombia, South Africa. And so we're, across the board, our business is this has piqued our interest as well to see the kind of retail adoption, because retail in the crypto space tends to be the precursor to institutional adoptions. And we've seen that already kind of take place in Europe. So it's interesting to see it happen in the US, really, transform the way that European investors are thinking about crypto and really trickling in Latin America and parts of Africa as well. So in the next slide, Bruno, we talk a little bit about how institutional investors characterize digital assets. And so, like I said before, 6 out of 10 investors surveyed believe digital assets have a place in their portfolio. I think a lot of people try and draw the comparison of Bitcoin to gold. And so I think those folks are part of the 40% that believe digital assets belong in the alternative asset class. And so Bitcoin does have a lot of similarities to gold. It's a non-sovereign store of value. It's, really difficult to manipulate or forge. It's really hard to, you can't really scientifically fake gold, right? It's something that's proven by its existence, by the material properties that make up a bar of gold. And Bitcoin, it's similar. It's backed by mathematics, by cryptography. It's really hard to recreate a Bitcoin. It's nearly impossible to recreate a Bitcoin. However, I think, if we look at the 40%, and then on the right-hand side of the slide, the 20%, the investors that believe digital assets to be independent, I think it's the folks who are looking at the additional characteristics that Bitcoin has beyond gold. So differently than gold, it's digital, right? It exists to be spent and used in a digital manner. There's no physical manifestation of Bitcoin. It's divisible. It's divisible up to the 1/100 millionth decimal point, so 8 decimal points over. And so we can, you can send fractions of Bitcoin, really different than gold, where you have to send a whole gold bar. You'd have to melt down a gold bar in order to send it. If I wanted to send Bitcoin to Bruno, I could theoretically send him Bitcoin in 10 minutes. And so it's also seizure resistant. So that transaction can happen cross-border, me sending Bruno Bitcoin in 10 minutes, without the need for a central counterparty to clear that transaction or the banking network to facilitate the transaction. I can send it directly to Bruno peer-to-peer
or even we having to meet in order to exchange that, right?
Right, exactly. We could send something with never having met before, because we both trust the system is going to facilitate the transaction. Exactly. And so Bitcoin becomes a bit more spendable and transportable, and its return profile looks a little bit different than gold, right? It has some sort of correlation to gold in the short term. Over a longer time horizon, it doesn't. And that's pretty interesting. And I think, we see that as the combination of the hard money thesis of Bitcoin. It's difficult to manipulate. Supply is fixed. So the hard money thesis plus the digital nature of the asset gives it this network effect. So it has a network effect almost similar to a Facebook or an Instagram or a social media platform, where the additional adoption of new participants in the network gives it this growth in value. And so we see a lot of investors who believe Bitcoin is an independent asset class because it's completely different from a fundamental perspective than anything we've seen. Spencer Bogart from Blockchain Capital famously called Bitcoin an investment platypus because it has characteristics of so many different types of assets: FX, venture, fixed income, equities. And so we find that to be really, really interesting. And Bitcoin is truly something that's different and unique.
Yeah.
So the next slide, just the things that institutional investors found appealing about digital assets were, its uncorrelation to other assets. So, if you look back, there are certain days where Bitcoin does have a high level of correlation to, I think, the 5 biggest moving periods in the S&P on a downward perspective since Bitcoin's inception in 2010. Bitcoin tends to have a correlation in a 30 to 40 day time horizon, and that's really due to the risk off nature that happens in those macroeconomic periods. But over a longer time horizon, Bitcoin is truly uncorrelated. If you actually think about Bitcoin on an infinite scale going forward, it actually should technically have a correlation of 0 to any other asset class because it's completely unique. It's an innovative technology play. A lot of people see the high potential upside of that. And then down the bottom, there still are some arbitrage opportunities. It's non-sovereign, free from government intervention. And so there's a lot of positives that were gleaned on the insights on the appeals of digital assets that we found in our survey. And then lastly, before I get into questions, the last slide is just the different narratives that exist right now. I think we've had some conversations with institutional investors ourselves. And one of my favorite comments is from Dan Moorhead of Pantera Capital. He called Bitcoin a call option on a future monetary system. And so, if you believe Bitcoin could potentially be this asset that's, what global trade is transacted in over time, it's a really interesting way to think about the volatility in the asset class and how it could potentially grow and be that medium of exchange globally over time. So down the left-hand side, some of the exciting aspects or narratives that we see are digital golds, the view that assets like Bitcoin help people store value, which increases, the ability for people to store value in inclusive financial systems around the world, but also in the developing world where hyperinflation exists, where asset seizures are more common. Having an alternative to central bank issued currency is a really interesting narrative feature. The diversification benefits. There's a lot of work that's been done on this, but basically, the view that Bitcoin and other digital assets are uncorrelated over a long period of time. We were talking about this yesterday, but I think if someone in 2009 had invested in a $100 portfolio, had invested $1 in Bitcoin and $99 in a money market fund, they would have equaled the return of the S&P 500. So Bitcoin tends to compound at 209% year over year, and so as a diversification tool, certainly the uncorrelation plus the compounding nature that we've seen as the asset has grown and matured make it novel. Also leads into the fact that it's sort of like a venture capital bet. If you think about Metcalfe's law, which is the growth of a communications network, is the number of nodes in that network squared. Well, if you look at the growth of Bitcoin as being able to truly drive the network effect of this new monetary asset class, and we've seen 50 million plus people own or transact in Bitcoin on a daily basis. There's really high potential upside there that a lot of family offices are seeing in particular. So one of the narratives that we're seeing. And then lastly, this is really the future beyond the future, right? If you don't think of the world in the next 1 to 3 years, but if you think 3 to 5 to 10 years, we could truly see blockchain being a new paradigm for the issuance of real world assets. So the ability to almost, and this is where Ethereum and other types of tokens come in, it's almost monetization as a service. So you're thinking about using a native blockchain to reduce costs of the ability to send something that's a representation of value across borders, whether that be a private equity fund that's become digitized, or even shares of digital music, right? If instead of having Spotify, for example, sit as a middleman to artists and listeners, what if you could create like a decentralized Spotify and have a token within the Spotify network equate to sort of a credit or the rights to ownership of music. So really interesting ways that we can start to think about tokenization over a time frame, something that we're spending a lot of time researching, not something that we offer today, but we're really excited about increasing the social financing channels and increasing this story of decentralization among traditional assets. Now, Bruno, I'll stop there. I know we had some questions come in, and you sent a few over to me. Do you want to pick some of these out, or is it okay if I pick a few and speak through them?
Sure. We received some questions here over email that when we first launched the live. So I believe if you can touch from one of the aspects, one of the we received was what is the biggest challenge, operationally speaking, for institutions to interact with this digital asset class?
Yeah, it's a great question.
Yeah.
There's not a perfect answer to this question, but I think there's two things, and I think they're both in process of being solved. So the first is the infrastructure. And if you look at historically, the SEC in the United States has rejected applications for ETFs. They usually cite market manipulation and custody is really the two drivers of their uncomfortableness with approving an application at the time. And I think we're really well on our way to solving that with our custody platform. We've built and designed it and received an audit on it in a way that we would a traditional platform, which is something that we do in other asset classes today. So operationally, custody is on its way to being solved. Market manipulation is on its way to being solved as well. Most of the exchanges that were either pumping fake volume or had some less than ideal practices. They're really being they're not as widely traded. They're not as institutions like ourselves, like Hashdex and others. They're not a part of our offering. We don't connect our end counterparties into exchanges that are doing any sort of nefarious activity in terms of kind of self-promoting the volumes that they're seeing on their platform. So we're seeing those types of solutions or the market manipulation go away. We're starting to see custodial platforms like ourselves and some of our other competitors really kind of drive like this operational readiness for large institutions. I think some of the other bit is the career risk that comes along with getting a chief investment officer comfortable with moving a large pool of assets into crypto. A lot of that was de-risked when Paul Tudor Jones a couple of months ago famously put out a letter in which he said, right now, I think he said, my bet is the horse that I'm choosing is Bitcoin.
Yeah.
And so he put a portion of Tudor management into Bitcoin futures. So the career component is being de-risked. We're working on a lot of these things. I mean, challenges operationally exist just by nature of Bitcoin being 8 decimal places versus, 3 decimal places for traditional assets. So there are small things that are being worked on behind the scenes. But then from a macro perspective, I think a lot of the challenges that people saw 1, 2, 3 years ago have really been worked out and solved.
And I think we have time for just, we have a few questions here on our channel, and I'll shoot one over to you, and then I'll take one because I believe that one is for us.
Sure.
So the one that I'm going to ask you is people keep asking when the institutional investors come in, but we see this happening, has happened sometime now, right?
Mm-hmm.
And however, do you think there's a possible turning point or an event or in the future which these ceases to be the question? Do you believe that maybe the ETF or the Bitcoin hitting a new all-time high or investments, or what are your thoughts on that?
Yeah, I mean, it's you know, big people, it's interesting to see who's watching the Bitcoin price. And every time we get a run, like we're kind of at the end of right now, right? It ran from 9,200 US dollar to about 11,000 US dollar. In that sort of span, there is this kind of increased interest from institutions. It pops up, it re-enters the conversation. I mentioned before, but I don't think institutional adoption is a wave. I don't think there's a single inflection point, and I think it differs by the type of institution, their investment mandates, how much discretion they have over their portfolio, and we've seen that tide start to come in. And so, you know, from our perspective, the early adopters are really single-family offices, the firms that had full discretion over their portfolio. A lot of times they have a history of in understanding technology. They could be tech founders that are investing through their single family office. So we saw that as the kind of the early adopters. We then, you know, we went through this transformation ourselves. Global macro hedge funds, you know, they're all over this stuff right now. If you look at from a macro perspective, the equities market in the U.S. seemed to be sort of went through a bit of a decoupling with economic fundamental data in, you know, in June, July, and we're seeing negative interest rates across the globe. We're seeing, you know, we saw the futures curve for oil go negative. So global macro traders have a really challenging time right now finding alpha, and I think a lot of them have sought those opportunities in digital assets. And so those are kind of the pioneers. Behind that, we're starting to see much more sophistication from who would normally be the sophisticated investors, right? The pensions, the endowments, the foundations, the registered investment advisors. They're either, if they're a market intermediary, they're reacting to client demand, and we've started to see some of those trickle in. I think one other thing to mention, Bruno, is the Office of the Comptroller of the Currency in the United States, the OCC, made a pretty historic announcement last week through an interpretive letter where they said banks can now custody digital assets as part of the federal regulation of the overseer of banks in the United States. And so we are registered in the state of New York as a limited purpose trust charter company, and so we've seen even banks, right, who have, you know, tight capital controls. This is really something that may be too emerging from them to invest into the infrastructure behind. Get in touch with us and talk about ways that we could offer sub-custodial arrangement to them to offer our custody service as an almost white label, so that they continue to own the relationship with their customers, but they can offer them crypto. So there seems to be this really, you know, every time there's a positive regulatory announcement, every time there's a little bit of additional macro uncertainty, and every time, quite frankly, we see some price action, there seems to be, you know, a additional phone calls that come our way from institutions. So it's not a wave, it's not a crashing wave, but a slow rising tide. And we're really actually seeing that happen. I think obviously an ETF is the holy grail of this space at some point. But right now, we are definitely seeing institutions who want to directly allocate really, you know, step up and do that.
All right. This one I'll take in Portuguese because it's one for us. Luiz Nunes fez uma pergunta para a gente no chat, falando qual é a vantagem de investir no HDAI, o índice que os produtos da Hashdex seguem, ao invés de investir direto em Bitcoin. Ô, Luiz, excelente pergunta. O HDAI ele foi desenvolvido pela Hashdex para representar esse mercado de criptoativos, e a gente introduziu critérios rígidos de elegibilidade para poder tornar o investimento o mais simples possível. E esse índice ele reúne as principais criptos, né? E com isso o investidor tem exposição ao mercado como um todo e não só ao Bitcoin. Os fundos nossos aqui no Brasil, eles dão ao investidor exposição em menor ou maior proporção de acordo com o perfil do investidor, né? Então você tem fundos para o investidor geral que investem até 20% em cripto, fundos para o investidor qualificado até 40% e fundos para o investidor profissional que vem até 100% do HDAI. O investimento via fundo oferece algumas vantagens, né, em relação a simplesmente você ir ao Bitcoin, porque você tem Além de você utilizar as plataformas de investimento que você já conhece, até respondendo a pergunta do Samuel, a gente está presente nas principais plataformas de investimento, então XP, BTG, Modal, enfim, várias dessas plataformas. Que já conhecem uma maneira muito simples e muito rápida. Você, com um botão, você consegue investir nas plataformas. E a tributação também é uma questão muito importante, que é muito simples, né? Que é uma tributação de fundo multimercado de longo prazo. E, enfim, espero ter conseguido responder a sua pergunta. And Joshua, we are running way over time that we intended here. So let's get to closure here. I'll just switch to our subscription here page. And I'll thank you so much, everyone, for joining us. Special thank you to you, Joshua, and the whole Fidelity Digital Assets team. It's been a pleasure to start engaging this journey with you guys. And for more information on us, please visit our website, www.hashdex.com, and follow us on our social media. Once again, thank you so much, everyone, for joining us, and stay tuned for future events like this one.
Thanks, Bruno.